Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, or good evening, wherever you are in your corner of the world. The EU announces its first ever plan to regulate cryptocurrencies. The executive arm of the EU has said that the future of finance is digital, but it's important to mitigate any potential risk. The new legislation wants to reduce these risks for investors while also giving legal certainty to those issuing these assets. So the European Commission on Thursday put forward plans to regulate crypto assets in what will be its first ever attempt to oversee the nascent technology. And a new bill proposes to put U.S. crypto exchanges under a national framework. So a new bill could bring cryptocurrency exchanges under a single federal framework, and the Digital Commodity Exchange Act of 2020, introduced Thursday by Representative Michael Conaway, Representative Texas, seeks to create a federal definition of digital commodity exchanges, putting them in their own legal category and charging the Commodity Futures Trading Commission, CFTC, with oversight. The bill outlines a new framework for digital currencies, treating them similarly to commodities under the Commodities Exchange Act, which governs that asset class. And under the framework, crypto exchanges would enjoy a federal jurisdiction, allowing them to operate in the entire U.S. rather than applying for 49 different state money transmission licenses. The DCEA also allows for certain types of initial coin offerings. So if passed, the act would streamline a number of disparate cryptocurrency regulations in the U.S., creating legal clarity for token issuers and lowering the barrier to entry for exchanges hoping to operate in a compliant manner. And what is the number one thing that CEO of Ripple, Brad Garlinghouse, and the CTO of Stellar, Jed McCaleb, continue to state over and over and over again? This solves that issue because it is cryptocurrency regulations in the U.S. creating legal clarity. And not only for one state, but for all of the 49 different state money transmission licenses, simplified and clarified into one bill. On the next article, Brazilian fund manager, the Hashdex, launches world's first crypto ETF in a partnership with NASDAQ. So the Hashdex NASDAQ Crypto Index ETF has received approval from the Bermuda regulators and will be listed on the Bermuda Stock Exchange, BSX, by the end of 2020. Hashdex, the regulated Brazilian fund manager, has entered a new deal with NASDAQ to launch the world's first crypto exchange, the world's first crypto index exchange traded fund ETF listed on the Bermuda Stock Exchange, BSX. Also, in an unprecedented monetary overhaul, the Fed is preparing to deposit digital dollars directly to each American. And I'm going to zoom in as this is very fine and very tiny. Over the past decade, the one common theme, despite the political upheaval and growing social and geopolitical instability, was that the market would keep marching higher and the Fed would continue injecting liquidity into the system. The second common theme is that despite sparking unprecedented asset price inflation, prices as measured across the broader economy using the flawed CPI metric and certain stagnant worker wages would remain subdued. As a reminder, the Fed is desperate to ignite broad inflation, as that is the only way the countless trillions of excess debt can be eliminated, and has so far failed to do so. And what is one thing that you hear over and over again, and when you hear liquidity, or I should say that you think of on-demand liquidity? The Fed's failure to reach its inflation target, which prompted the U.S. Central Bank to radically overhaul its monetary dogma last month and unveil flexible average inflation targeting, or FAIT, whereby the Fed would allow inflation to run hot without hiking rates, has sparked broad criticism from the economic establishment. even though, as we showed in June, that deflation is now a direct function of the Fed's unconventional monetary policies. As the lower yields slide, the lower the propensity to spend, and in other words, the harder the Fed fights to stimulate inflation, the more deflation and more saving it spurs as a result. And incidentally, this is not the first time this discovery was made. In December, we wrote, "One bank makes a stunning discovery. The Fed rate cuts are now deflationary." So in short, ever since the Fed launched QE and NIRP, it has been making the situation it has been trying to fix even worse while blowing the biggest asset price bubble in history. And having recently accepted that its preferred stimulus pathway has failed to boost the broader economy, the blame has fallen on how monetary policy is intermediated. Specifically, the way the Fed creates excess reserves, which end up at commercial banks instead of trickling down all the way to the consumer level. So the response was striking. The two proposed creating a monetary tool that they can call recession insurance bonds, which draw on some of the advances in digital payments, which will be wired instantly to Americans. As Coronado explained the details, Congress would grant the Federal Reserve an additional tool for providing support, say a percent of GDP, in a lump sum that would be divided equally and distributed to households in a recession. Recession insurance bonds would be zero coupon securities, a contingent asset of households that would basically lie in wait. The trigger could be reaching the zero lower bound on interest rates, or, as economist Claudia Sahm has proposed, a 0.5 percentage point increase in the unemployment rate. The Fed would then activate the securities and deposit the funds digitally in households' apps. As Potter added, it took Congress too long to get money to people, and it's too clunky. We need a separate infrastructure. The Fed could buy the bonds quickly without going to the private market, and on March 15th, they could have said interest rates are now at zero. We're activating X amount of bonds, and we'll be tracking the unemployment rate. If it increases above this level, we'll buy more. The bonds will be on the asset side of the Fed's balance sheet, and the digital dollars in people's accounts will be on the liability side. Essentially, the Fed is proposing creating a hybrid digital legal tender, unlike reserves, which are stuck within the financial system and which it can deposit directly into the U.S. consumer accounts. And in short, as we summarize, the Fed is planning to send money directly to Americans in the next crisis. So that is very exciting, as it's something we've discussed. And now today, it has arrived and it is here. So soon these will be set up and available to every American, and you will have the instant payments delivered directly to you within seconds on the new financial system. On the next article, the SatoshiPay launches D-Transfer for quick ex-border payments. And I want to thank XRP Howie at Manny6Manny for tagging me in this article, because as you know of this channel, we're a huge fan of Ripple XRP and Stellar's XLM. So according to SatoshiPay, its investee company, SatoshiPay, has launched a new B2B business-to-business payments platform to speed up its cross-border payments, the Proactive reported. The platform, called D-Transfer, is built on SatoshiPay's blockchain technology and the Stellar network, and it touts speed, cost, and transparency as three main benefits, according to the report. And the system will integrate currency exchange into every transaction, enabling customers to track payments in real time. And that will let approved banks and businesses join a compliance network and share KYC, KYB details. So D-Transfer has already connected its payment platform to bank networks in Europe, the US, Mexico, Nigeria, and Tanzania. And it is in the midst of trying to expand to other such bank networks in Europe, Asia, and Africa, according to Blue Star per the report, and it has signed its first client, a European business operating in sub-Saharan Africa in the microfinance industry. In the last article for This video is also like the 0x, Kraken, and Stellar awarded board seats at top crypto lobbying association. The cryptocurrency industry advocacy group, the Blockchain Association, bolstered its board Tuesday with members from 0x, the Stellar Development Foundation, and Kraken. I'm going to leave you with a final thought. Be the best version of you. There's no one else on earth like you. So every day that you wake up, be the best you that you can be. And we will catch you in the next one.